Hey, what's up, guys? My name is Kevin, also known as Kev Trades, and I will be showing you guys exactly what I do every day, day in and day out. In this video, I will be showing you guys exactly what my pre-market plan looks like, how I create it, what my thought process is, my setups, the execution, and this is a trade I took that I'll be showing you guys exact breakdown of how I took it, why I took it, etc. Excuse me. So now what we have here, as you guys are looking at, is a chart that I have it on replay mode and I have not market has not opened yet. So I have it still on pre-market. I want to show you guys exactly what my thought process is, how I do the things I do, why. So for instance, before market even opens, while I'm creating my watches, first thing I decide, or first thing I look at, first thing I have to decide is what the bias for the day is. Now, it's pretty clear here, I would think, what the bias is, or is it? Now here's the thing. There is two 4-hour fair value gaps right here, right? We can see two 4-hour bullish fair value gaps that we extended to the side. There would normally be bullish fair value gaps. But the day after, we can see we had a lot of selling pressure and we completely went through it. We just went through it. So we have two new bearish fair value gaps, right? So we have to draw those new ones. And sorry, I'm a little slow when it comes to drawing. Okay, so now we have those, correct? What do we see is that we have to also start drawing out. Once we determine the trend, we can see it's obviously bearish because we inversed these bullish fair value gaps. So that's confirmation that we're in a downtrend on the higher time frame. As you can see, we're in the 4-hour time frame. So that's what gives me a better look at what the market is looking, because obviously if you scale down to the hourly, 30-minute, 15-minute, you're gonna go crazy. You're literally gonna go crazy. You're gonna end up losing your whole house if that's what you do. So go on the scale up daily, 4-hour. Daily will tell you the same thing that I'm looking at. Essentially, it will tell you that price went up, price went down. Okay, but now I want to see the more technical side of it. So that's why I go to the 4-hour, which is it tells me that this got inverted. These 4-hour bullish fair value gaps got inverted. So now what I do after that, since we're still on a 4-hour time frame, is I start drawing all types of liquidity nearby on the higher time frame. So in case I take a trade, I know what my take profit is, or in case price sweeps liquidity, I know exactly what it's sweeping. So let's start off. We have nearby pre-market high. Cool. We have the already internal liquidity drawn out, which is these 4-hour bearish fair value gaps. Now we have yesterday's New York session low. Then we have pre-market low from the previous day, and then we zoom out a little bit more. We have this nearby, right? We have New York session closer here, New York session low, and then that day's pre-market low. So we have a good amount of external liquidity, and then we drew out every type of liquidity on the 4-hour time frame nearby. Okay, now we also have to draw a pre-market low and then the pre-market high. But the reason I don't draw it right away is because normally until market opens, it will move a lot. So it probably will be a new pre-market low and pre-market high by the time market opens. But we'll see. Now what do we have? Go to the hourly because we're done with the 4-hour. Now that it's around 5 a.m. So let's jump to 8 a.m. Sorry, my tongue was like anyhow. Now we are at the 8 a.m. We're getting ready for market to open. What do we see? A new pre-market high. Cool. Let's recalibrate it. Now what we have is an hourly fair value gap. Bullish fair value gap. Okay. Now does that mean that my bias flips? No, that means that I draw it out because I want to keep that in mind in case I take any trades. Okay. So let's get into market open. Well, before we get into market open, actually, pause there. We make the watch list. So what is it that I'm looking for a market to do for me to take a trade? What does market have to do for it to take up my money, right? What's a high probability setup for me? So overall, as I said, we're bearish. So I'm looking for price to give me bearish confirmation on the 15-minute time frame around here, right? And I'll take shorts and hopefully write it out to down here and down here. If price breaks above this and breaks above this 4-hour value gap, maybe I'll look into tap it into here. But the only thing is that for that to happen, price cannot inverse this fair value gap. Now you guys may be asking, Kevin, how is price not going to inverse this fair value gap if it touches the other fair value gap? Well, there's a difference between price disrespecting a fair value gap and price inversing a fair value gap. Completely different things. So if price inverses a fair value gap, that means that candle closes above this fair value gap, which is completely inversing it, which is like up. But if price, only the wick breaks above, that's disrespecting a fair value gap. Two completely different things. So that's what I'm looking for overall. If price wants to go up that route, then we'd have to see if the fair value gap is disrespected or not, and what time it is. All that comes into play. But essentially, the A+ setup would be around here for me to get bearish price action confirmation to get into shorts. So let's go down to 15, get ready for market to open. There we go. Okay. There we go. Let's boom. First candle opens. This is market open. We get bullish with high volume. Okay, so that means there's a little bit of buying pressure, right? So the next candle price is probably gonna go up. And then, I don't know, maybe it keeps going up. Who knows? Well, I do know, but, you know. Okay, we get bearish selling, what you call it? Yeah, bearish confirmation to the downside. But the important thing here, before we get even taken into a trade, it looks nice for a trade right now, but the important thing we do before even taking into trade is that we have to see if my risk to reward is there. If my risk to reward is there, then we take it. If it's not, we don't take it. So let's see. If I go like this, boom. First take profit would be New York session low. This really doesn't make sense for me. Okay, ideally this doesn't make sense for me at all. What give a dollar, risk a dollar to make $1.30, $1.27 doesn't make sense. Now if we put it all the way down here, then that would make sense. Risk a dollar for almost $2, right? But we have to be realistic, because normally price after it sweeps the previous day session low, that's when it reverses. So let's go based off that. It doesn't make sense. So what I will do is, I know that this is what I'm looking for, but I want to wait for a better entry, right? So let's go down to a 5 minute, and it looks very closely to this price action. Okay, now here's the thing. Ready? We did break lower. Okay, and essentially what could happen is that it just drops, and then I didn't get in the trade, and I have to be okay with that, or I have to take the risk and just go with it and see what happens. I chose not to go with the risk this time. I'm telling you guys exactly how I took this trade. I chose not to take the risk. Why? Because we were also in a hourly fair value gap before this candle disrespected it. We were right here, right? So I don't want to get in just for price to bounce and just to stop me out. So I wait patiently. So we get this candle, and it completely disrespects the candle. Wait, no, it inverses it because the candle closed below. We inversed the hourly fair value gap, the bullish fair value gap. So that's confirmation that we're bearish. So now I'm just looking for an entry at this point. I just want price to shoot up a little bit, give me somewhat of room to get a good risk to reward. So let's see what happens on 5. Okay, we start buying up. Okay, we get bearish candle right there. Maybe give me okay. Okay, so now we're getting 2 bearish candles with high volume. That would be my entry. Okay, that would be my entry. So let's get in. Stop loss above here. You see, first take profit. See the difference? Risk $1 to make $1.66, almost over 1.5, over $1.50 that I would be making for risking $1. So now it makes sense. Okay, now it makes sense. So now we could say that we're down to take this trade. So let's do it. Simple as that, baby. Let's do it. So sells. Let's say 2 contracts. Stop loss above here. And I would as I always say, I'm gonna go for the home run, but safely. How am I gonna go for the home run safely? I'll show you guys right now. Take profit will be here. Okay. Now that's a really good risk reward, but that's not all that we're doing. Confirm. Now we're setting a different type of order. We're gonna go to buy, and we're gonna go to limit. Only 1 contract I would want to. This is my take profit. This is my TP1, as I say. And I put it all the way to this level. Why? Because I want that when price goes to this area, which is New York sessions low from the previous day, I want price to take some profit just in case it wants to reverse there. That's an area that is valid for price to reverse. Okay, so from there, we now we just wait. There's nothing else for us to do here. There's nothing else. That's it. Once you get in, sit in your hands. Sit in your hands. There's nothing else to do. So let's scale up to 15 and let's start waiting patiently. Okay. Okay, we're down. We're down a little bit right now. Okay. Not looking good though. Not looking good, but we'll wait patiently. We will wait patiently. Okay, we go. We get our first sell-off. It's good. Let's see what happens. We have a bounce up as we're getting near New York session high from New York session low from the previous day. We get a bounce up, a little bit of higher volume, but not too high where I'm worried, to be honest. Okay, lower volume. Looks like buying pressure is starting to die off. Not worried. Boom. First take profit is hit. As you can see, this went from from 2 contracts to 1 contract. We just let off a load. So what do? We move this stop loss all the way to break even. Right? So now I just took, this is a winning trade no matter what. No matter what, this is a winning trade. No, that's not that. Okay, it's acting weird. Anyhow, from there we just wait again. See if it wants to stop me out at the rest at break even, or if it wants to just tap into the last TP. Damn, we missed it by like a couple pips, and bang, we hit it. So that's essentially what it is. That's essentially what it is. You guys see how simple I kept it? Keep it simple, stupid. It's simple as that. You just keep it simple. I give you guys a complete breakdown. This is the complete breakdown. I mean, if I missed anything, I would love to know, because complete breakdown of why I took this trade, how I took it, thought process, how I prepared to it, everything. And that's essentially what I do every single day, live on Discord with my whole team. So, and essentially that's just how I trade everywhere. And if you want to watch me do this live every morning, I go live on YouTube where I make my pre-market watch list every single day, and on Discord too, all for free. If you guys are interested, I will leave the link in the description, and I'll see you guys there. Peace.